Question 7. What are the different types of ETH ETFs? While both physical ETH ETFs and futures-based ETH ETFs represent the primary categories, when it comes to ETH ETFs, further distinctions can be made based on their specific characteristics. Here's a deeper dive into these subcategories. 1. Physically backed ETH ETFs. As previously mentioned, these ETFs directly hold ETH tokens within their portfolio, aiming for the closest possible tracking of the underlying asset's price. However, due to regulatory hurdles, they are not widely available in many jurisdictions. 2. Futures-based ETH ETFs. A. Physically settled futures-based ETH ETFs. These ETFs hold contracts that physically deliver ETH tokens upon expiry. This structure intends to reduce the tracking error associated with rolling over futures contracts, potentially offering a closer alignment with the price of ETH. However, the availability of these types of ETFs might be limited due to similar regulatory hurdles surrounding physically backed options. B. Cash-settled futures-based ETH ETFs. This is the most prevalent type of ETH ETF currently available. They utilize futures contracts that settle in cash based on the difference between the contract price and the reference price of ETH at expiry. While offering greater accessibility, these options are more prone to tracking errors due to the difference between the price of futures contracts and the actual price of ETH, as well as rolling costs incurred during contract rollovers. C. Synthetically replicated ETH ETFs. These ETFs don't directly hold ETH or futures contracts. Instead, they utilize a basket of various financial instruments like swaps and other derivatives to synthetically replicate the performance of ETH. This approach aims to achieve exposure to ETH without the complexities and potential tracking errors associated with futures contracts. However, it introduces additional counterparty risk, as the performance relies heavily on the creditworthiness of the counterparties involved in the synthetic replication process. Additional considerations: leveraged and inverse ETH ETFs. While less common, some ETH ETFs offer leverage, amplifying returns, or inverse exposure, profiting from price decreases, to the underlying asset. These options entail significantly higher risks and are generally not suitable for all investors, requiring a deep understanding of their complexities and potential implications. Regionally focused ETH ETFs. Some ETFs might focus on specific geographic regions or regulatory environments, offering potentially unique exposure to the ETH market within those specific contexts. However, the availability and specific characteristics of these options can vary significantly depending on the region. Question 8. What factors should investors consider when evaluating Ethereum ETFs? Selecting the right ETH ETF requires careful evaluation of various factors that can impact your investment experience and returns. Here's a comprehensive breakdown of key considerations for investors. 1. Underlying structure. Physical versus futures-based. As discussed previously, understand the fundamental difference between physically backed and futures-based ETH ETFs. Each structure comes with its own advantages and drawbacks in terms of tracking error and availability. Subcategories within futures-based. Explore the subcategories within futures-based options, like physically settled versus cash-settled, and synthetically replicated ETFs. Each offers different approaches to achieving exposure to ETH, with varying levels of complexity and potential tracking errors. 2. Expense ratio. Cost comparison. Compare expense ratios across different ETFs. These fees, which cover management costs, custodial expenses, and potential performance fees, can significantly impact your long-term returns. Choosing an ETF with a lower expense ratio can help maximize your gains. 3. Tracking error. Performance deviation. Analyze historical tracking error data for different ETFs. This metric indicates how closely the ETF's price has tracked the actual price of ETH. Lower tracking errors are desirable, as they signify a closer alignment with the underlying asset's performance. 4. Liquidity. Trading volume. Consider the trading volume of the ETF. Higher trading volume translates to a more liquid market, allowing you to buy and sell shares more easily at the desired price, especially for larger investments or situations where quick exits might be necessary. 5. Underlying custodian. Security expertise. Research the reputation and security practices of the custodian employed by the ETF provider. This custodian is responsible for safeguarding the underlying ETH holdings, and their expertise and track record in digital asset security are crucial factors. 6. Regulatory environment. Evolving landscape. Stay informed about the evolving regulatory landscape surrounding cryptocurrency and ETFs. Potential changes in regulations could impact the structure, operation, and attractiveness of ETFs. 7. Investment strategy. Risk tolerance and goals. Align your chosen ETF with your overall investment strategy, risk tolerance, and investment goals. Consider whether you prioritize lower tracking error, potentially offered by physical ETFs, or readily available options, common with futures-based ETFs. 8. Leverage and inverse options, if applicable. High-risk considerations. If considering leveraged or inverse ETFs, be aware of the significantly higher risks involved. These options are not suitable for all investors and require a deep understanding of their complexities and potential consequences. 9. Diversification. Portfolio context. Evaluate how an ETF fits within your broader portfolio allocation. While ETFs can offer exposure to the cryptocurrency market, it's crucial to maintain diversification across different asset classes to mitigate risk. 10. Additional fees and commissions. Trading costs. Be mindful of potential trading commissions associated with buying and selling shares of the ETF through your brokerage account. These fees can add to the overall investment cost. Question 9. What is the future outlook for Ethereum ETFs? Predicting the future of any financial product is inherently difficult, and even more so for the rapidly evolving cryptocurrency space. However, by analyzing current trends and developments, we can form an educated perspective on the potential future outlook for Ethereum ETFs. Positive factors potentially pushing for growth. Growing interest in Ethereum, continued adoption and development within the Ethereum ecosystem, including the upcoming transition to proof-of-stake, POS, could lead to increased investor interest in ETH, potentially driving demand for ETH ETFs as an accessible investment vehicle. Regulatory clarity. As regulatory frameworks surrounding cryptocurrencies evolve, increased clarity and potential approvals for physically backed ETH ETFs could broaden their accessibility and appeal to a wider range of investors. Institutional adoption. Growing institutional participation in the cryptocurrency market, including potential investments in ETH ETFs by institutional investors, could further fuel the demand and adoption of these investment vehicles. Potential challenges and uncertainties. Regulatory hurdles. Regulatory uncertainty and potential changes in regulations could impede the development and widespread adoption of ETH ETFs, particularly for physically backed options. Volatility in the cryptocurrency market. The inherent volatility associated with the cryptocurrency market could deter some investors from participating in ETH ETFs, particularly those with lower risk tolerance. Competition from other investment vehicles, alternative investment options, such as directly owning ETH or other cryptocurrency-related products, might continue to compete with ETH ETFs for investor interest and capital allocation. Overall, the future of Ethereum ETFs hinges on a complex interplay of various factors. While the potential for growth exists, driven by factors like increasing interest in Ethereum and potential regulatory advancements, several challenges and uncertainties remain. Here are some additional points to consider. Technological advancements within the blockchain space. Innovations and advancements in blockchain technology could potentially improve the efficiency and security of ETH ETFs, making them more attractive to investors. Growing awareness and education. Increased public awareness and education regarding cryptocurrencies and blockchain technology could play a crucial role in driving broader adoption of ETH ETFs. Question 10. How do Ethereum ETFs differ from Bitcoin ETFs? While both Ethereum, ETH, ETFs and Bitcoin, BTC, ETFs offer exposure to the respective cryptocurrencies, they have distinct characteristics and cater to different investment objectives. Here's a breakdown of the key differences. Underlying asset. ETH ETFs primarily track the price of Ethereum, ETH, the native token of the Ethereum blockchain platform. BTC ETFs primarily track the price of Bitcoin, BTC, the native token of the Bitcoin blockchain network. Purpose and functionality. ETH ETFs offer exposure to the Ethereum ecosystem, which is primarily known for its smart contract functionality, enabling the development and deployment of decentralized applications, dApps. BTC ETFs offer exposure to Bitcoin primarily as a store of value and a potential hedge against inflation. Underlying technology. ETH ETFs track an asset built on a proof-of-stake, POS, consensus mechanism, transitioning from proof-of-work. This mechanism is expected to be significantly less energy-intensive compared to the POW mechanism used by Bitcoin. BTC ETFs track an asset built on a proof-of-work, POW, consensus mechanism, which has been criticized for its high energy consumption. Investment considerations. Investor preferences. Investors seeking exposure to the potential growth prospects of the Ethereum ecosystem and its applications might find ETFs appealing. Investor preferences. Investors primarily interested in Bitcoin as a potential store of value or a hedge against inflation might favor BTC ETFs. Question 11. What are the long-term growth prospects for Ethereum ETFs? Assessing the long-term growth prospects of Ethereum ETFs involves analyzing a complex interplay of factors, some with inherent uncertainties. Here's a breakdown of potential driving forces and mitigating factors to consider. Potential drivers. Growth of the Ethereum ecosystem. Continued adoption and development within the Ethereum ecosystem, including its use cases in decentralized finance, DeFi, non-fungible tokens, NFTs, and other areas, could fuel demand for ETH and consequently, ETH ETFs. Regulatory clarity. As regulations surrounding cryptocurrencies evolve, potential approvals for physically-backed ETH ETFs, along with increased clarity in the regulatory landscape, could lead to broader accessibility and wider investor participation. Institutional adoption. Growing institutional interest in the cryptocurrency market, including potential investments in ETH ETFs by institutional investors, could further fuel demand and propel the growth of the market. Technological advancements. Innovations within the blockchain space, specifically those enhancing efficiency, scalability, and security of ETH ETFs, could make them more attractive to a wider range of investors. Mitigating factors. Regulatory hurdles. Regulatory uncertainty and potential changes in regulations, particularly regarding physically-backed ETH ETFs, could hinder their growth and adoption. Volatility in the cryptocurrency market. The inherent volatility associated with the cryptocurrency market could deter some investors from participating in ETH ETFs, especially those with lower risk tolerance. This volatility also makes long-term projections challenging. Competition from other investment vehicles. Alternative investment options, like directly owning ETH or other cryptocurrency-related products, might continue to compete for investor interest and capital allocation, limiting the growth potential of ETH ETFs. Alright, folks, we've covered a lot of ground today about Ethereum ETFs. Remember, the future of these innovative investment vehicles is still unfolding, with both exciting opportunities and potential challenges. Before you jump in, do your thorough research, understand your risk tolerance, and align your investment decisions with your long-term financial goals. If you're still curious or have any questions, leave them down in the comments below, and we'll be happy to chat further. And don't forget to like and subscribe for more informative ETF content from Chat ETF. Thanks for watching.